about the financials? I'm going to get to you in a second, Buck, because the 6 largest U.S. banks, the Journal is saying, could return more than $100 billion to investors as a result of the loosening regulations and lower taxes. This is coming after the president signed that memorandum on Friday ordering a review of Dodd-Frank. I spoke with both the CEOs of Bank of America and J.P. Morgan about how much they're going to return to shareholders. Listen to this.
We've been increasing our dividend, and we've got to go through the CCAR process in the next few weeks in the second quarter, in the early second quarter, and we'd look to keep pushing the capital return to shareholders as part of the thesis of the company. Each year we've increased it. Now we've got to increase it again.
I've always believed you have a consistent dividend policy. The next thing you really want to do with your capital is invest in the future. If you have opportunities to invest in the future, I'd rather do that than buy back stock. And the last thing is, if you buy back stock, it's not the same thing buying back stock at this price as it is buying it back at that price.
So what about the regulatory changes? You were the chairman and CEO of UBS Paine Webber. What's your take on the impact of this regulatory pullback? And do you agree $100 billion could be on the table that the Journal says in terms of...
I do, and it'll be a combination of lower regulation, but also net spreads will increase as interest rates go up. When interest rates are very low, you have no spreads on your fixed income desk and you can't make real money. That's going to be the biggest contributor to increased earnings with the financials. Dodd-Frank was passed in 2010, 400 new rules, 200 are inculcated in corporate America. There are estimates that cost us 24 million labor hours to adhere to these rules. Put that in perspective, the building of the Panama Canal was only 20 million. So it was very cumbersome and very expensive for corporate America. Now, there are aspects of Dodd-Frank that you may want to keep. Okay, the stress testing, for instance, or not letting the financials get into proprietary positions or over leverage. I agree with that. But there's a lot of redundancy, and the OCC will walk into a mid-sized bank, and you could have a performing loan and never miss the payment and say, we don't like that loan, put it in a non-performing category, and increase your reserves.
Yeah. But then there's the tax reform.
Growth.
We've been talking this morning about the potential of border adjustment tax. Congressman Kevin Brady joined me yesterday on Sunday Morning Futures. Here's what he said about this border adjustment tax.
Our current tax code favors foreign products over American products and drives these companies offshore. So we are determined to end that, and so we're going to have a tax code at the end of the day. Let me make this prediction. We're going to have a tax code at the end of the day that no longer favors foreign products over American products. We're going to end the tax on Made in America exports so we can compete and win anywhere in the world. And we're going to not just eliminate, we're going to obliterate any tax incentives to move American jobs overseas.
So the border adjustment tax, that's really where things have gotten slowed up, right? We were expecting tax reform a lot sooner than second half of 17.
Well, part of that argument is correct, okay, in terms of unfavorable taxation for American products. On the other hand, you have to realize that if we want to build a factory in Germany or a factory in Belgium, they want employment for their people. So you're almost forced as a CEO, if you choose to domicile there, that you have to understand the local situation as well. Now, the tariffs that are going back and forth, I think, are not fair to the United States, and I think the president is right in that regard. We have to renegotiate some of these and start being a better negotiator than we have been in the past.
Buck Sexton.
Oh, I just wanted to ask if you thought that there was some leeway that the private sector gives to the Trump presidency, despite some of the uncertainty that everyone knows is there with his policies, particularly on the geopolitical front, because he's a private sector guy and because some of the people he's brought in as his senior-most advisors and in the cabinet have such a wealth of that private sector experience. Do you think then the market is slower, or at least gives him a little more leeway to make some of these unorthodox decisions without spooking the market in a bad way?
Again, I think he just has to move a little bit slower because he is spooking the markets and relative constituents by going too fast. But I do agree with you. I think he will add some unity to the process with the people he will engage with, particularly the private sector. And I think that's all good for the markets, good for the country, et cetera. I look at it as a four-legged chair. He wanted to improve the military. He's done so. He wanted to bring business people in because they're not bureaucratic. He's done so. He wants to show you they're going to bring some smart people, so he taps Goldman and others in the Treasury. And he wants to show you that his ego isn't as big as we all think when he wants to talk to Romney. But I will tell you, though, he's got to start acting like he is the most powerful person in the world. He does not have to be number one in everything, because he's won. And that's the best advice I'd give him. You've won. You don't need to worry about the popular vote and all this other nonsense. It hurts him. He comes across too thin-skinned, and he's got to stop it because he has to act more presidential.
I wonder if he's getting that kind of advice from his insiders.
I don't think so.
Your insiders tend to tell you what you want to hear.
Yeah.
That's right. Give me your watch, I'll tell you what time
That's
it is.
why I asked, exactly. Joe Grano, always a pleasure.
My pleasure.
Great insights, as always, from
Thank
you.
you.
Joe
Nice
Grano
meeting
there.
you all.